Hello everyone and welcome to TTT Markets. I am Fotis Papafeofanos and today we are going to discuss why taking fewer trades often leads to better results. Well, most traders believe that more trades mean more opportunities, more entries, more chances to win, more potential profit. But in reality, the opposite is often true. Taking fewer trades usually leads to better results. Not because you miss opportunities, but because you improve decision quality. So in this video, we'll break down why more trades reduce performance, what this looks like on the chart, and how professionals filter opportunities. Let's start with a simple idea. The market is always moving, so it feels like there are always trades. But not every movement is an opportunity. Let's go to the chart. As you can see right here, I have an empty chart without any indicators, and we are looking at the 4-hour time frame. Look at this. You are watching clean trends. There are sideways ranges, and there are volatile movements. Now here is the key point. Only a small portion of this chart offers high quality setups, but many traders try to trade all of it. That's where the problem starts. When you increase trade frequency, you lower your standards. You accept weaker setups. You enter in unclear conditions. So let's zoom into an example and let's look at choppy market conditions. Let's take a look at this area right here, but it is quite choppy. There is no clear direction. There are frequent fake moves, specifically we have fake breakouts, and we have low follow through. If you trade actively here, you accumulate small losses. Not dramatic, but consistent. This is where overtrading quietly damages performance. Now let's compare this with a different environment. Let's take a look at a clean trend setup. Let's take a look at this over here. This trend right here. Well, the trend direction is obvious. Pullbacks are controlled and the levels are respected. In this environment, you don't need many trades, just 1 or 2 good trades. This is where professionals focus. Let's make this very practical for you. Same pair, same time frame, 2 approaches. So a high frequency trader will take 8, let's say, to 10 trades in mixed conditions with inconsistent structure. There will be sideways, there will be trending, you name it. And then there is a selective trader that will take only 2 or 3 trades, only clear setups in strong conditions. The second trader often performs better, not because of skill difference, but because of selection. Here is something most traders don't consider. Every trade you take, so let me do this so you can watch the chart a little bit better. Every trade has a cost. You have the spread, you have the slippage, you have emotional energy, and you have decision fatigue. More trades means more cost. Let's look at how this shows up. So look at this move. Let's say you sell here, for example. One clean entry could capture it, but overtrading leads to multiple entries. So one entry, one short, and you capture this. But let's say you have a different system that gives you multiple trades, and you buy the bottom, you sell, you buy, sell. You take 8, 10 trades, you are overtrading. And this is leading to, as I said, multiple entries, mixed timing, and reduced overall return. It's the same move, different execution. Another key factor is decision quality. The more you trade, the more decisions you make. The more fatigue builds. The more mistakes appear. This is not about strategy, it's about mental capacity. Professionals reduce decisions to protect execution. Look at this intraday sequence right here. Early in the session, you have clean moves, as you can see, clear setups, but later, if you enter later, you have forced entries and you have lower quality trades because you have lower reward risk. So this is typical. The more you trade, the worse decisions you make. So why fewer trades improve performance? Taking fewer trades does three things. Number one, it improves selection. Number two, it reduces emotional interference. And number three, it maintains execution quality. It creates consistency, not through strategy, but through behavior. What is the practical thing you can do, what you can apply straight away? So this is what you can apply immediately. Before taking any trade, ask, is the structure clear? Is the market condition supportive? Would I take this trade if I could only take one today? If the answer is no, you skip it. This is how professionals filter. Let's look at this with indicators. So I'm going to show you now the indicators, and I'm going also to apply this. So we have a channel and we have some signals on the chart. What did we say? Number one, is the structure clear? What am I doing here? I'm looking for buy setups or short setups into support or into resistance, and I am looking for a trend. So what is happening here? Do I have a clear setup for this particular system that I'm trading? Maybe you do mean reversion, maybe you do trend following, it doesn't matter. I wish to show you using some specific indicators how you should approach this. So number one, is the structure clear? Do I have a clear structure here? No, I don't. Is the market conditions supportive? No, it depends on news. Would I take this trade if I take only one trade today? For example, do I sell here? No, I don't. Well, then skip it. It doesn't matter if you think you have a signal, leave it alone. There are others, for example, there was one up here. This move. Yes, it did move a little bit higher, but I did have the sell signal. And then, is the structure clear? Yes. Is the market condition supportive? Yes. Would I take this trade? Yes, high reward risk. And it worked. Maybe in your case, you are using another system. It could be trend following, it could be mean reversion. Maybe you use moving averages or Bollinger Bands, it doesn't matter. The first thing you need to do is be clear about the structure and market conditions. And then you ask yourself, would I take this trade if I take only one trade today? That's it. You don't need to trade everything. You only need to trade the right parts at the right areas, because your edge exists in specific conditions. If you are looking, for example, to go long, this is not the area to go long. This was the area to go long, right here. This is when you had the good signal. So you only need to trade the right parts, not everywhere. More trades don't create better results. They often reduce them because they lower quality, increase mistakes, and they add unnecessary risk. Professional traders understand this. They don't chase activity, they focus on precision. In trading, success doesn't come from doing more. It comes from doing less, but doing it better. Thank you for watching. See you in the next video.